Empire stock up today. This company is one of Canada's big grocers. It owns Sobeys, for example. Stephanie Hughes of Bloomberg has more. Stephanie.
Hey, Andy. So, yeah, that's right. Empire was up as much as 8.7% today, which briefly brought the stock to an all-time high today, and this was because of strong second quarter earnings. So the adjusted earnings of 73 cents per share were not only higher than a year ago, but it was able to come ahead of analyst expectations. Management said it was able to grow its net earnings through share repurchases and cost-cutting strategies in its Voilà business. Further to that, the management also said that it was going to continue focusing on cost-cutting measures. So Scotiabank analyst John Zamparo said the quarter had some solid performance, but with a few caveats that some non-core items that weren't core to the central business there are what drove the beat. However, he did add that the company is showing some solid execution in a slowly improving environment. So the consumer hasn't fully bounced back yet, but Empire is doing pretty well nonetheless. Both Zamparo and an analyst from TD said that they were expecting shares to have a positive reaction, which we're seeing today, Andy.
Let's talk about Transcontinental. It used to be a big commercial printer. It's moved away from that business. Obviously, printing not seen as a growth industry. It's huge in packaging right now, and that stock's rallied sharply over the past year.
Yeah, that's right. So at Transcontinental, those shares are up over 7% today, and that was enough to put the company among the top TSX performers today and briefly brought the stock price to its highest level since March 2022. And it's another strong earnings story. So what used to be mostly a commercial paper product company, as you mentioned, had its 79 cents per share in adjusted earnings come ahead of what analysts were expecting. So like you mentioned, used to be more of a focus on paper products like flyers, magazines, newspapers, door-to-door ads, you name it. But National Bank analyst Adam Shine said that the fourth quarter revenues were a bit light, but the adjusted EBITDA managed to come ahead of what his team and consensus were expecting there. He added that the ongoing Canada Post strike cost the company about $7 million in profit, though they were able to offset some of that impact by their savings in their printing business. So he added that, Shine added that the key question moving forward will be how much longer this ongoing strike persists there, Andy.
Mm-hmm. Yeah, it is. It's fascinating. And the government, latest headline I saw, the federal government saying, we're not getting involved at this stage, even though it's been so disruptive, that stoppage. Thank you very much, Stephanie.
Thank you.
Stephanie Hughes.